Hi guys, welcome to Gold Price Daily Analysis. This is the weekend video. It's basically for Monday, 13th of May 2019. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We do urge you to keep the habit of checking out the description of our video for further information. At times, after the video is completely shot, we add some information if needed. Also, we do urge you to watch our last two videos in order for you to get the best of this video. We are going to start our analysis right after a quick recap. We have been waiting for important economic data to be released from the United States. For the core CPI month-to-month and year-to-year for April came below forecasts. And also we got some comments from the FOMC members. The most important one was that there will be a possibility of a rate cut if the tariff stayed as is. For the gold price action on the last trading session on Friday, gold took advantage again of the volatile equity market and the disappointing data released from the United States. Gold made it to 1,289 plus and then back to 1,285 plus and closed at that level. For the strategy recap on the last episode, we said that stick to the sell and wait a break and close below 1,266. Also, again, the disappointing data from the United States gave support for the gold, and we did not see a significant move to the downside. Let's move on now to the economic calendar. On the economic calendar for Monday, we don't have actually influential or important economic data to be released from the United States. All what we have to do is to watch for the major US equities and to watch for the US dollar. The movements or the direction of the US dollar and the US equities are going to set the course for the gold on the next trading session. Let's move on now to technical indicators. On the last trading session on Friday, we have had a trading range from 1,283 to 1,289. Numbers are rounded and the market is closed. Gold spot closed on the last trading session on Friday above 1,285. The number is rounded. For the daily simple moving averages, for the 20 days it's 1,279. For the 50 days it's 1,291. If gold closed above this number, I would consider it as a buying signal. For the 100 days it's 1,295, and for the 200 days daily simple moving average is 1,253. For the RSI readings, RSI for the 1 hour was 49 bullish, less than the last trading session. For the 4 hours is 54, and for the 1 day is 51, also bullish. So for the supports and the resistance, supports are located at 1,282, 1,276 and 1,271. Those are the meaningful supports, and the resistance 1,292, 96 and 1,300. That's all for the technical indicators. We'll move on now to that trading strategy. Before going through the trading strategy, let's revise our theory about the market. 3 weeks ago, we expected gold price to rise, and our expectations were backed up with two facts. The first one is that the volatility in the US equities was rising, and the trade deal between US and China was approaching a deadline. Our theory helped us so far because we did not run after the market, which we did not change our sentiment or our point of view about the gold. We did not jump into what other analysts have proposed to their clients or their communities, that there is a rally starting up with a target of 1350, which did not happen, and I don't expect it to happen. Uh, for the trading strategy, the trend is bullish or neutral to bullish as long as we are above 1282. Price action the last trading session was positive. We are above 50 days, 100 days daily simple moving average, and the RSI readings are all bullish: 1 hour, 4 hours, 1 day, and the US dollar is expected to rebound. On the last Friday, the US equities have already recovered its daily losses, pointing to an end, at least for now, for the correction which have started already on the beginning of the last week. That correction was triggered with the tweets from the President of the United States, Donald Trump, about a trade deal with China, which threatens to increase the tariff from 10 to 25, and it's already have been increased, but the trade talks are still going on. The positive step on the US equities on the last Friday was fueled with positive comments from both parties, from China, from the Chinese and the Americans, about the progress of the trade talks, and that the trade talks did not break down totally, and there will be future rounds where the both parties will meet again and again until they finalize a deal, which I think, or I believe even, that it have already reversed the sentiment of the market. The market was thinking before Friday that it's over, no trade deal at all. Okay, now the market is thinking again that there is more rounds of talks, and there will be a trade deal finally. Technically, gold is in a good bullish setup, and maybe it's ready to move higher from a technical standpoint. But fundamentals have the fundamentals has changed totally, and I don't see gold is needed as a hedge anymore, or as much as it was needed as a hedge in the last week. At least for the time being. There is another fact that we have to keep watching for. It's the rising tension between Iran and US, and though until now the market is not paying attention for this, but we have to keep watching for that. Now our advice based on what we have said so far: if you are in sell, protect and sell more above 1296, which I consider it as a significant rise. If in buy a drop off above 1290, if still out of the market, sell at rises. So basically I'm still looking at the gold as a sell opportunity, better than a buy opportunity. I'm not ruling out also that there is a possibility of a technical sell-off in the gold without a rise, but from technical standpoint there is a possibility of a rise. Thank you guys for watching. That's all for today. Please like, share and subscribe, and I will see you in another video on Tuesday.